Good morning. It's Mary Ellen McGonagle, and you're watching the MEM Edge Show. This is the show where we put you in front of stocks that are on the move. And as usual, quite a bit going on in the broader markets. Let's go ahead and review what we're going to be covering today. As usual, we are going to go ahead and take a look at where the markets are. We had a little bit of a certainly at the very least, a pullback last week, had a lot of people raising their eyebrows. So we're going to review quickly where we stand in the markets as far as that current uptrend and what we can look forward to at the very least over the near future. And then from there, we're going to go ahead and use StockCharts.com to uncover leadership stocks. And of course, from my work, I'm always on the prowl for that next big, what is called a leadership stocks. These are stocks that outpace the broader markets, are on track to continue to do so. So we'll go ahead and take a look at that. Also, looking at positive stocks within defensive groups. Last week certainly rattled a few cages, and you'll want to have at least a game plan should you decide to buffer some of your faster moving stocks with more defensive plays. We'll go ahead and uncover how you can do that with StockCharts.com. Also, we're not quite done with earnings season. We have a couple of headliner stocks that are due to report their earnings this week. So I'll get you in front of some of those stocks. We can review those names. And then lastly, uncovering candidates following last week's pullback. And by that, I mean that a lot of top names did pull back with the broader markets, and even more than the broader markets. As we know, the broader markets were down about 2.2% on the S&P 500, but a lot of very viable, what I would say, candidates pulled back quite a bit more. So we'll go ahead and review how you can uncover some stocks that got a little bit overdone to the downside. And of course, today's action, we're already seeing a pickup, certainly at least in technology stocks. But let's go ahead over to StockCharts.com and we can go ahead and get started. Before I get into this, let me just go ahead and show you a view of the S&P 500. This is a daily price chart. We're using SPX. And as usual, I've gone ahead and overlaid some of these simple moving averages. We can certainly start here, and we have what's called the 10-day simple moving average. That's your green line. The red is your 50-day simple moving average, and the blue is a 200-day simple moving average. Quite simply, they are smoothed out lines of the price history going back over that specific time period. Now, what I do want to, this chart was created after the close on Friday, and I'm pleased to say that given today's action so far, we're seeing some constructive action, because what I want to draw your eye to here is this, it should be blue, but it is your 200-day simple moving average. And when you're looking at broader markets, these key moving averages are going to be rather critical as far as determining the health or the unhealthiness of the broader markets. Certainly you want to see, I'm taking you back here to the last spring as we emerged out of that difficult period in the beginning of 2018. And you ideally want to see these broader markets trading above these simple moving averages, which now act as support. Of course, this is the bear market going into the end of last year. And this 200-day simple moving average, certainly for a lot of technicians, was a real area of support that we wanted to see the markets break above, with an eye toward a continuation of this uptrend that occurred since late December. And we were certainly moving along quite nicely until last week, when the markets gave back some of these gains and broke back down below that 200-day simple moving average. Really quite concerning. But today we are managing to go ahead and break back above that. in bullish fashion. So, of course, one day does not a market make, but it is certainly encouraging to see that in today's action. So we can also take a look at what's called an RSI. That's this top panel here. It's a relative strength indicator. The relevance here is you want to see this indicator above this dashed net neutral. And in addition, you want it ideally to be sloping upward in a positive fashion. And in fact, it is doing that. We're seeing, again, today it bounced right off of that net neutral, which is another encouraging sign. And the stochastics had turned negative. This dashed line here at the 50, if the stochastics break down below, we are in what is called negative territory. Stochastics are yet another momentum indicator, super powerful when you're looking at various indices as far as determining the health or not. I'm taking you back here to that December 24th low in the broader markets. As the stochastics down below 20 were in oversold, they started to head north. Once the stochastics broke above this dashed line, which is 50, up into positive territory, we were in fact in good standing, and you could compare that with the stochastics up here also heading in a northern fashion. So right now the stochastics have broken down below that 50 in negative territory. We will want to see the black line cross up through the red. The black is the stochastics, the red is your signal line. So at some point, whether it's throughout this week or beyond, we will want to see these stochastics in a similar fashion here, break back up through the red and then back up through the 50 to signal that we are back in a near-term healthy position. But we are certainly having what I would say is very encouraging action today as far as setting that type of action up going forward. So that is where we are in the broader markets. From here, let's go ahead and drill down beyond certainly the S&P 500 and take a look at some of the sub-industry groupings within the broader markets. So what I've done here is what's called candle glance. You can access that on the first page of StockCharts.com. And the candle glance initially will be pre-populated, and it's going to have a lot of very major indexes and indices on there. What I have gone ahead is used some of the pre-populated indexes, but also added in some of the S&P 500 ETFs that will give us some sector and industry group views. So XLY down here is the industrials, XLK is the technology, and so forth. And all of that, I'll show you how you can get those ticker symbols so that you can then input that, because you will want to pay attention to this really quite powerful candle glance view. It's providing you with a 2-month snapshot of any given indice, and also it has simple moving averages pre-populated. The blue is your 20-day, this is a daily price chart, and then the red is your 50-day simple moving average. And similar to the broader markets, you want to see this given index or sub-industry grouping trading above these simple moving averages, and you also want these simple moving averages to be heading north in a bullish fashion. So looking at the sub-industry groupings that I've put in here, I not only have each of the major indexes, the NASDAQ, S&P, the Dow, also some of these sub-industry groupings, healthcare, financials, industrials. From here, you can go ahead and add the indicator of your choice. I've gone ahead and input what's called that RSI that we were looking at on that broader market chart. And the RSI, again, is a relative strength indicator, and I've gone ahead and sorted it descending so that we are now looking at the markets and these sub-industry groupings strength to weakness. And again, really quite powerful. If you can get into the habit of doing this on a regular basis, it will serve you well, because what we are seeing is what you would view had you been doing quite a bit in the way of screening the markets. This does all of that for you. So what we can see is utilities up here in the forefront. Real estate, this is going to be all about real estate investment trust stocks. As many of you know, these two areas have stocks that provide quite a bit in the way of yield. The average yield on utility stocks is 3.3%. The real estate REITs are in the 3% range. So really quite attractive, certainly as a defensive play. Let's go ahead down and look at the weakest sub-industry grouping. I have the 10-year Treasury yield, which has last week it declined quite a bit, and it has been, in fact, hovering around that 2.6% on that 10-year. And when you look at that 2.6, compare it to a potential 3.3% yield, certainly that would make these utilities quite attractive. But let's also take a look at how the utilities are trading in a very confirmed uptrend. So not only are you getting that potential yield, you're also potentially could be involved in a stock that is having price appreciation. But we're going to drill down. I talked about how you can uncover stocks in these defensive areas should you want to participate. And certainly they are attractive. These real estate stocks and utilities both up again today. So as we move on, XLK is the technology sector, and it's having a very nice bounce this week. Also encouraging because now it's back up above that 20-day simple moving average. So we can go ahead and drill down and move on. The industrials had a bit of a struggle last week. Of course, today Boeing is a big component in the industrial sector, so it's getting hit just a little bit today. But as we drill down again, we can see some of these weaker areas, the Treasury yield, healthcare. For those of you that follow the market super closely, you'll know that a lot of healthcare providers, healthcare related stocks did get hit hard last week on the heels of the reintroduction of the Welfare for All bill. But it really rattled quite a bit of people, so healthcare did get hit. So now we have a nice sense of the broader markets where the strength has been and conceivably continues to be. Let's go ahead and drill down and talk about some of the other areas where we can go ahead and take a look at some of those defensive areas and how you might be able to uncover potential candidates for your portfolios, for your holdings. So what I've done here is we're looking at the sector summary, again, from that first page of StockCharts.com. So with this sector summary, this is where you can go ahead and access those ticker symbols for those of you not familiar, that you can then populate with that into those candle glance. So what I've done here is really not anything. I've just presented the subsectors within the S&P 500, and it automatically sorts it for you by performance today. So what I am going to go ahead and do is we can very quickly start with that real estate sector fund. We talked about REIT stocks offering a very attractive yield. So from here, we can go ahead into, there certainly are various areas that you can look at, but I'm going to take us into what's called specialty REITs. And there are some rather interesting stocks within here. So anytime from my work, and I would recommend that you do this as well, when you go into a given sector and then click onto that sub-industry grouping, the initial sort is going to be those ticker symbols, those stocks within that sub-industry grouping, sort it by performance. But what is really quite powerful and very, very easy for you to do is rather sort it by what's called Scooter. That's StockCharts technical rating. Very, very powerful sort because this is providing you with those stocks listed by order that are the most technically sound. And I'm going to take you directly to a stock that I'm certainly very familiar with, those that are part of the MEM Investment Research Edge report. We've had this particular stock on our suggested holdings list for quite some time now. But let's go ahead and take a look at the chart and what one may certainly find attractive. Certainly, among other things, this stock is going to provide you with a nice yield. But in addition, we can take a look at how the stock is positioned technically. So this stock offers a 3.5% yield, but let's take a look at where we are. I talked about these, we're looking at a daily price chart. The simple moving average, this green line is your 10-day simple moving average. So a smoothed out version of the last 10 days. The red line, your 50, the blue is your 200-day. But more currently, we want to pay attention to the action of this particular stock relative to that 10-day simple moving average. So the stock is finding a presence above an upward trending 10-day simple moving average. So that's certainly bullish. We can also see the RSI above this net neutral 50. We talked about that being constructive, and also the slope of that RSI line is positive. Let's take a look at this MACD. This is yet another very powerful indicator that's very simple to overlay on your chart. So we want to pay attention with the MACD to this crossover, black line up through the red, but also the position relative to this neutral zero. So we can see the stochastics are above this zero in positive territory, also poised for another black line up through the red, which can be really powerful when you marry this crossover signal with your other indicators. And then what I'm going to do really quite quickly here is annotate. You can annotate and save these charts to any list that you might create. So really quite useful. So what I'm doing here is quite simply annotating this chart, and I'm pointing out to you what's called a saucer pattern. And this saucer pattern is achieved when a stock attempts to hit a high in price. I'm taking you back to the end of February, and the stock pulls back, very simply pulls back a little bit. But when that stock approaches that prior high and then breaks out to a new high in price, that is called breaking out of a base. And it really can be very, very powerful as far as pointing you toward stocks that are poised for another leg up. And I can take you back here. Certainly this is in line with that decline in the broader markets. This is another, oops, I guess pardon me, my drawing skills could use a little bit of work here. But what I did want to point out to you is in essence, the power of being able to spot these stocks as they break out of these bases and then achieve another leg up. So that is CTRE. Again, as you may recall, we went into the real estate grouping, sorted it by scooter, and then uncovered individual stocks. I'm back in that list right now. MPW is another very viable candidate. Both of these stocks are in the space where they work with properties involved in medical healthcare. So for instance, Care Trust has long-term care, hospice type properties, medical properties, as the name implies. This is a very robust area within these real estate investment trusts. It's very much related to where we are as far as an aging population. Baby boomers certainly starting to retire. They are starting to come into a time where there is a need for these type of medical properties. So you want that behind you as well, the sound reasoning to support. Now let's go ahead back to these S&P sectors, and we can quickly take a look at the utilities. This was another area up there in the forefront relatively as far as performance. And we want to take a look at some potential candidates within the utilities. These, again, are areas where these stocks are going to provide you with nice yields. But using this SCTR rating, you're also going to have that double powerful whammy, if you will, where you're going to get stocks that are technically sound as well as potentially offering you that yield. So you can very simply hover over these ticker symbols, and it will provide you with a thumbnail snapshot. And we can see a lot of these are hitting new highs in price. A lot of these utility stocks. So we can certainly go ahead and drill down and take a look at potential candidates. This is Pinnacle West, PNW, and this particular stock offers about a 3.2% yield. But again, we have that potential saucer-like pattern that is emerging. The stock could potentially experience a leg up, And for those of you not familiar, oftentimes this is a drop with the broader markets at the end of last year. When stocks have these nice legs up, of course, these stocks are not going to go up endlessly. They are going to need a period of what's called consolidation to digest this significant move. That is what we are experiencing certainly over the last 2 weeks with this particular stock, but it's all with an eye toward another potential leg up with that particular stock. Now, I am going to, so hopefully you were able to get a very more defensive sectors and go ahead and sort the given list by scooter, and then drill down to take a look at some of the underlying stocks up here in the forefront. Of course, the higher the rating, the better, to ideally get you in front of stocks that are technically sound, and then of course also offer you that nice yield. So I talked about the action in last week's market, and certainly it was a bit unnerving for some people that may have just gotten into the markets recently to see that kind of a pullback. But oftentimes these pullbacks can very well present themselves as an opportunity to enter into stocks had you not gotten into some of these more powerful stocks in the beginning of the year. So what I'm going to do right here is give you some easy scans that you can go ahead and potentially identify candidates. We're going to be on the prowl for stocks that pulled back last week, but they are in these stronger groups. So I'm going to take your mind back to when I had that candle glance view up, and certainly technology stocks were in the forefront as far as showing strength, and certainly their technology stocks have been very strong. But before I do that, let's go ahead. Here again, we are looking at the various sub-sectors within the S&P 500, again, sorted by today's performance. What I'm going to do here is go ahead and give you a longer term chart. Let's take a look at year to date, and very simply, this is going to tell you where the strength has been since the beginning of this year. And certainly we can see industrial stocks up here in the forefront, technology, and then communication, and so on. Healthcare's recent hit has put them down at the bottom. But within industrial, I'm going to circle back to the industrial fund. But actually, we can do that right now. What I want to do is, now that you have a sense, not only from that candle glance chart, we can see where the strength has been year to date. And in fact, really, we don't need to go back year to date. We can take a look at the last 1 month. And a lot of this, of course, is going to be the recent move into some of these materials. But we can see a very similar, actually, this I ran this over the weekend, and industrials were up in the forefront. I think Boeing is really taking a hit out of that. So I'm going to go ahead back to the year-to-date view. And what I did want to do from there is go ahead again and click onto that sub-industry grouping. So here we are, year-to-date. It's been all about aerospace and defense. Of course, we've seen railroad and some of these others that have been had quite a significant move into March from the beginning of the year. So what I'm going to go ahead from here to do is pull up the aerospace sub-industry groupings, and we can see some big movers, but that is not going to be of interest to me. I want to look at that 1 week view, and I'm also going to sort it by scooter. So hopefully I didn't lose you there. We had that year to date, and then the sub-industry grouping also year to date. Here are the underlying stocks within aerospace. Go ahead and sort it by scooter, and I want to see the 1 week performance. And here's what I'm on the lookout for. I want to see technically sound, again, that's going to be your upper quartile stocks, that got hit last week with an eye toward potentially uncovering candidates that are technically sound, but pulled back. And so interestingly, today we are seeing some upward movement in some of these stocks, because the list certainly, the performance over the last week was down a little bit more. But let's go ahead and take a look at a potential candidate. This is HEICO and HEICO. We're looking at a daily price chart. This is a stock that has had a significant move, certainly year to date, but this is the pullback that we are keying in on. And so we can see the stock broke below this 10-day green line, simple moving average. And what we can do from here, because the MACD down here, moving average convergence divergence, did have that black line down through the red, but we're still up above zero. We're still in certainly positive territory, but we will want to see this price or this stock potentially break back above that 10-day. What I'm going to do from here is go ahead and pull up an intra-day chart. That's going to be a 60-minute, or each bar here is 1 hour. I've overlaid a 5 and a 13 in these simple moving averages. Let's go back to when the stock first entered into this powerful uptrend back in February, so you'll know what you will want to look at. Actually, we can go back even further to the end of January, and the stock's price broke back up above these simple moving averages. We can see that the RSI traded up above this net dash neutral. And then your MACD had that black line up through the red. So when we can marry those three occurrences simultaneously on this 1 hour chart, we can see that it really put you in front of a very, very lengthy uptrend. So let's take a look at where we are now, because now we know what to be on the lookout for with this 1 hour price chart. And we can see that the stock's price has not entered up above these simple moving averages. Not quite yet. This green line is your 5 hour simple moving average, so we're still a bit trapped. Your RSI is poised to turn positive, so we're certainly looking interesting. The MACD did have that black line up through the red, but we're still below that net neutral zero. So we have a little bit more to do here in the way of work. But this is what I did want to point out to you, is that concept of going in, looking at those big winners, certainly year to date, and then drilling down and looking at some of the stocks that got hit within those industry groupings. We can also go ahead into technology, and we can look at some of the sub-industry groupings within technology. Again, scooter rating, high to low. Look at some of these names that got hit last week, and this one certainly was down a bit more. Sienna did get hit quite a bit last week. This is this bearish outside reversal day on response to earnings. But take a look at the stock's action. It found support at an upward trending 50-day simple moving average. Very encouraging. We're looking at a daily price chart. Now, while it could conceivably bounce, we do want to see that RSI get up above that net neutral. We want to see the black line up through the red. So we're not entirely out of the woods yet, but we can go back to other time periods to see what we would need to see to get back into this stock that has pulled back. Now I'm running out of time, but I did want to, we can have time to review just one of these stocks that is due to report this week, and that is AVGO, Broadcom, a heavyweight certainly within the semiconductor stocks. And this particular company is due to report on Wednesday, actually Thursday, the 14th. So just taking a look here at this daily, the stock pulled back with the broader markets as well as with the semiconductor stocks. And we can see that it is finding its presence back up above this key 50-day simple moving average, but the RSI is still negative. I'm not a big believer in buying ahead of earnings, but it's certainly worth noting. You want to pay attention to the action going into earnings just to get a feel for what might occur. And I'm going to go ahead and leave it at that. Adobe is another big headliner that's reporting. But for those of you that are actively trading, good luck. Take care.